Hey everybody, hey traders, Chris Pulver here with the weekly outlook for all things stocks, forex, and cryptos. Let's talk about the markets today. This is the week of June 22nd through the 26th. A little highlight from last week: the Dow Jones scraped out a win at 1% for the week. The S&P was up just shy of 2%. Nasdaq around 3.75%. Bitcoin down a little bit towards 9,300 towards the close of the week, and the 10-year Treasury note just below 0.70%. This is a pretty obvious summer week. Last week was really the first time in 3 months that it felt like, hey, now it's summer trading. This is what summer trading feels like. The volatility is low, the stock market showing indecision, the forex market showing indecision. Volatility has shriveled. However, I think that the markets are getting ready for something bigger. As we drift into the rest of this month, as we drift into probably most of July, I wouldn't really expect a lot of breakouts, a lot of volatility, possibly until the middle of August. And there's a couple scenarios I've talked about with my traders over the last couple of weeks, and that is one, that the post-summer breakout is going to allow the big money to position ahead of the U.S. election in November. Or two, there really is no post-summer breakout. There is no positioning, and it remains to be a fairly tight, low volatility, range-bound, boring market for the most part for the next couple of months, and all eyes and focus are on the election. Either way, I want to make sure that I am positioned accordingly, and I will keep doing videos like this to make sure that traders are aware of what's going on with the big directions. I look to follow whatever the next big move is. It's just a matter of confirming it. So last week was a really boring week for me as far as trading. I had some robots that were running with some range-bound strategies that did fairly well. Just scooped up a few pips because the markets weren't really doing much. I actually had a robot, couple of currency pairs running. I was looking for some breakouts on the euro dollar and the dollar yen, and they took the entire week to fill, and there really has been no movement. So we'll take a look at the currency strength chart. We'll take a look at stocks. I want to see where we are in the SPY and look at the indices. Volatility's back down towards lows on the VIX. So we've had like a quick spike to the upside, a quick recovery. But looking at what's happening in the world, we have a Trump rally that happened in Tulsa this weekend with a less than stellar turnout, kind of marring campaign hopes a little bit. I'm sure that'll be spun in some positive light. We also have coronavirus cases that are spiking up again all over the world. So we've had, certainly hot spots in the U.S. that are starting to spike up. Cases and hospitalizations are increasing quite a bit. Airline stocks are taking a hit. Cruise line stocks are taking a hit. I think the market is kind of sensing that this is going to be a U-shaped recovery, an L-shaped recovery, which means that, again, more than likely, we are going to be bracing for possibly another fallback down to those March lows. Now, whether investors are ready for that or positioned for that, we don't know. But when you have Wall Street really hating on Robinhood traders or hating on retail traders, I feel like there's something bigger that's going to happen, and Wall Street most likely will have its way, and they don't want a retail trader to make more money. They don't want retail traders to make asset managers look bad. So I have a feeling there's going to be kind of a run against the retail trader to kind of bait them and fool them into just thinking they can buy and be complacent, but have no sense of equity management, no sense of margin control. And I just feel like it could be a tough road ahead over the next maybe 6 to 12 months with some really catastrophic moves, which we've seen. We've seen March, and that scared a lot of traders and investors. But since then, it's just been, if you've placed a buy trade, you've done pretty well. So trading is really not that simple. But it certainly can be simplified. So that's why I'm here to do videos like this. So what I like to do is let's talk the indices, let's talk Forex, let's talk cryptos, let's see what we have going on this week. Like I said, I'm prepared for kind of a low and slow week. I have some robots that I'll be talking about that do some really great range trading. And I expect those to kind of shine here for the next maybe month and a half, 2 months. But as we come into August, I'm expecting some breakouts. Hopefully we'll see a post-summer breakout. And from there, either post-summer breakout to position ahead of the election, or just stay the course, trade consolidation, and grind out some profits while I brace for the next big catalyst, which is probably going to be the election. So it's either going to be the election, or it's going to be another kind of stronghold from coronavirus on the economy and the contraction that will probably inevitably ensue. So that is that. So let's go ahead and dive into the charts. Before we begin, understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. If you're following me on YouTube, I love it when people are, giving me comments, direct messages on YouTube or Instagram. I have a video series out there. I'm just putting a lot of educational videos for free out on my YouTube channel called Keep It Seriously Simple. videos on support, resistance, trend lines, equity management, growth. I've got some subjects here, choosing a broker, which you'll see is going to be sponsored by my good friends at Forest Park FX, trading trends versus ranges, becoming a well-rounded trader, certain permissions that you have as a trader, whether you're U.S. trader, non-U.S. trader, if you can hedge, if you don't hedge, FIFO versus non-FIFO. I have a lot of traders asking me questions about information like that. Scalping and day trading, that was a really high one as well. And trading with robots. Also, let's see here, being consistently profitable year over year. And then just some fun ones like the best trade I've ever made, the worst trade I've ever made, stuff like that. So those videos will be coming soon, and you can find them. I'll just put them all into my playlist for the best trading strategies. Keep it seriously simple, so look forward to that. If you're following me out there on social media, like I said, send me a private message on YouTube. Leave a comment, leave a like on my videos. That's an easy way to get a hold of me, and I also look at the comments and reply back. You can send me a direct message if you follow me on Instagram. That's at pulver.chris. So look me up on Instagram, and if you follow me, then you can leave me a direct message, and I reply back to that as well. So I also have my Twitter, at pulverchris, which I just share the YouTube videos, and I'm posting everything either on my YouTube channel or IGTV. So that's the best way to check out these weekly outlooks and other videos, and that's it. So let's go ahead and dive into the charts now. Currencies for the week. Here is how the day started off for currency strength. Again, not a lot of volatility. What I keep checking on, and this is what I really stared at last week every single day in my trading room, that was right here. This y-axis right here. If we're not above or below 50, I'm really not that interested. So you can see that pretty much the entire morning, very limited volatility. We're just starting to break a little bit towards, we're at minus 50 here for the dollar and the yen. We're at positive, 60-ish on the New Zealand dollar and just around 40 for the Aussie. So again, showing some resiliency in the Aussie, New Zealand. I think these two will be the first currency pairs to really show a nosedive if we have any risk off trading. But, not getting overly excited, not thinking we have these crazy directions. We're getting some summer drift, I'll say that. The Aussie New Zealand remain somewhat floated. We still have some risk appetite out there as the stock market refuses to go down, but it refuses also to go significantly higher. So we are seeing some floats and some sustained strength on the Aussie New Zealand. However, you're noticing the currency markets, it's not moving a lot. But if this currency strength right here, if the vertical axis, the y-axis, is not getting over 50 consistently, I'm really not getting a ton of good movement out there. So that means that I'm either, manually, I'm not taking a lot of trades, but with automation, I'm trading a lot of range bound systems that are going after those, kind of condensed, compact areas where we have intermediate support resistance. And I'm going after little profit targets like 20, 30 pips, really small. Okay, so that's a little bit of the currency strength chart and how to adapt to that. Also for the calendar this week, this is all of the high impact news for the week. Not much going on. All right. In fact, it's a very quiet week with Thursday, Friday, actually Wednesday, Thursday, Friday, no high impact news. Now we do have, this is PMI numbers out of the Eurozone, so that will be in France, Germany, and the Eurozone. We also have the RBNZ official cash rate, which is expected to stay the same at 0.25%. They do have a statement. Let's go to medium impact here and see if they have a press conference as well. So that would be Wednesday evening. Where is that? Tuesday, yeah, so it's Tuesday evening, 10 p.m. Eastern time. That's technically going to fall into Wednesday's trading day, but I don't see the press conference. So we just have the cash rate decision at 0.25, a statement that goes with it. Most likely that will be pretty canned. And we've seen a lot. Actually, we've had several. I think 3 or 4 interest rate decisions from the Bank of England, Bank of Canada, the U.S. Central Bank. All of them have stayed the same, and the statements are all very similar. They're all prepared. They're all bracing. They're all looking for accommodation and forward guidance right now. They want to make sure that they can, help the economies with coronavirus and try to help these recoveries. But we've, made those emergency slashes where there's not really much else to do as far as monetary policy. I mean, sure, they can slash to 0, they can slash to -%, but for right now, we had those quick emergency cuts back in March, and everyone's just kind of staying the course and just kind of waiting to see, is this good enough? Is this good enough to help a recovery? We will see. But anyway, that's really all we have for the high impact news this week. Everything else is just kind of there. So I'm not expecting a ton of volatility this week, which means I'll probably rely on a couple of systems, one of which is called my perfect storm. The other is called my equalizer. I just taught some classes on both of those actually, and I'm preparing traders for summer trading. The rest of this month, pretty much all of July into that first week of August. Take a look at the first week of August. that should allow us to get into trading all the way through possibly the 7th of August. Again, not aggressive. I'm not using big trade sizes or anything like that because I'm just expecting to see some consistent profits roll in. But I will bide my time through the summer and we'll see how we position ourselves out of that. But in August, we tend to see these breakouts. So after that first week, you get into that second week of August, there's a post-summer breakout. If you expect to see some decent trends and some positioning, trends will probably show up in August. If they don't, then I think the market is really just buckling down, looking ahead, and I think the election in November is going to be the focus. And again, it's months away, but if this is going to be the inevitable catalyst, the market has a good way of just ignoring everything right now. Nothing good, nothing bad, nothing really moves the market, and then it's going to be all about the election. So we will find out, and obviously over the next few months, that's going to be very heated. And there will be more drama that comes out of that. So look forward to all of that. All right, so let's dive into the charts. Here is the S&P 500 or the ETF, the SPY. One thing that I am noticing is we had that little recovery to the upside, highs to slightly higher highs in price, but we have disagreement. Let me go ahead and try to draw that again. So we have higher highs in price, we have lower highs in momentum. We haven't quite reached it yet, but we're nearing the overbought conditions on the relative strength. So if that is the case, I would expect this to start topping out. Now, technically, where is a good level for this to start topping out? Well, I like this area right here where we had a really nice gap in the market. You can already see that that was kind of the perfect topping point earlier when we had that big sell-off on a Thursday a couple weeks ago. We could also have the same high getting hit, which we've seen for the last several years. The market has this really dramatic fast fall and then spends months clawing its way back. And then it hits that high, makes a slightly higher high, creates more disagreement, lots of divergence, and the market shorts itself again. So, what's funny is the news cycle that it takes to actually create that. The market just doesn't have technical reasons to drop anymore. It has to be supported by all this crazy fear-mongering news, and that is just kind of the new normal. The news cycles, the spins are so aggressive that we have these wild volatility swings. And what do we trade like this? Well, if we're going to get back up to these highs and start to see a sell-off in the market, I'm looking to go long inverse ETFs. You can buy puts on the major indices. You can play the volatility index as well, the VIX, and we should see the volatility index going up. We should see inverse ETFs going up. We should see the directions of the SPY and the ETFs with the Dow Jones, the Nasdaq, the Russells, the SPY, everything going down as far as the index direction. So, this has been a nice recovery. We know that. We've seen it from April and May, probably, to the chagrin of most, intelligent investors that are like, yeah, this is the real deal. This is going to be a U-shaped recovery. But the market just, we had the Fed with the Fed balance sheet growing, has really outpaced earnings. Earnings for the U.S. companies right now are not doing well. Q2 estimates are awful. Q3, Q4 are, estimates at best. And I think there's just a lot of uncertainty with the future of economic progress and recovery. So, the Fed has really single-handedly been responsible for this recovery along with other central banks. We've seen programs like unlimited quantitative easing and bond purchases. We've also seen the Fed talking about buying corporate bonds, which happened on last Tuesday, and the market tried to spike up from there. However, news like that is not making the market go higher. We have already gone. I'm not going to say high enough. There's certainly not a top in place, but just be prepared. That's it. So we're coming back to this level, major resistance ahead, coming back up to the highs in February, major resistance ahead. Again, the disconnect is there is no way that I could be convinced that coming back to these highs with this index or any stock price that we're actually in as good of a position as we were back in February or anything near that high. So I am looking for risk off. I think that's where the next big move is going to be. I'm just not sure what's going to cause it. We said the same thing last year as we started to drift from August to December. I was getting traders ready for a drop in the market. I did not know that coronavirus was going to be the catalyst, but this was a long time coming, and it was just masked and bundled and fueled into coronavirus and all the hysteria that went with it. So right now, the technical structure would be this. I'm watching these lows. I'm watching this low here. This was a, it's decent sell-off from a Thursday where we had, like an 1,800 pip drop in the Dow. I'm going to watch and see, do we have some structure right in here? We might have a trend line right there. We might not. This might be a little bit longer to form some type of rising wedge, but I'm definitely looking for some type of topping pattern in this area. So it could be, a crown. We could have a rising wedge. We could have a double top. Price action wise, I'll be looking for those classic patterns up here. We could also just deal with a ton of indecision. This might just go sideways on us for a while. And we just have to figure out how to grind out some pips, grind out some gains, grind out some profits, or stay patient in stocks, which is what I've been saying now for the last several weeks. So watch the VIX. If we start to see a big drop, then expect the instruments that I talked about as far as taking advantage and profiting from a stock market decline and currency pairs going to the upside and downside. What's risk on? What's risk off? If we fall to the downside, we're going to see strength in the yen, strength in the Swiss, strength in the dollar. If we stay here, stay sideways, we're just going to see a lot of consolidation in the forex market. So stock wise, I'm patiently waiting. Let's take a look at some of those airline stocks as they started to drop quite a bit last week. Here is Delta, for example. That's not Delta. Here's Delta. Interesting story on Hertz having to cancel its plans for, they file bankruptcy. The stock rallies almost 900%, and then they talk about wanting to pay their debtors back or creditors back with raising $500 million on a bankrupt stock. So that deal got canceled. Here is Delta. I'll use the daily chart here. So we had, a fair recovery, right? We had our lows back around $20, jumped all the way up to like the mid 30s, and came back to the same high, starting to head back down. Wouldn't be surprised if we start chopping around. We have some lows around 20 bucks. We have highs around 36. We might come right back down to those $20 levels. Now, could Delta go lower? Sure, possibly. I would consider, kind of a medium to long-term buy on Delta at $20. If there's one airline that will survive, I think Delta would be fine. So I do like this stock. I did buy it back in April, or actually, this low here was in May, but I had pending buys. It was a limit buy order off the lows. Thought I was going to get filled in April, got filled there for that dip in bottom in May, and ran up and took some nice profit there. So that is Delta. Royal Caribbean, as cruises are being canceled. I know Carnival has canceled some. I'm looking for Royal Caribbean here. I think it's RCL. An amazing recovery off the mid 20s, went all the way up towards $75, and again just kind of stopped dead in its tracks, pushing back down. This is another one. If we can see it go lower, okay, I'd like to see if we can get a chance to buy this again around the $22 to $23 area. Just head back down. That would be a good profit level to look for the future. This doesn't mean that I'm catching a falling knife. It just means I'm looking for bullish posture in here to see if we can maintain these lows, maintain some support. If it goes a little bit lower, I would still consider buying it. This might be the one, cruise line that I would consider buying over the others. Kind of pick your big winners. Royal Caribbean might be better than Carnival. Delta might be better than Southwest, right? So, I'm trying to pick the category winners, the sector winners, and see who is financially the strongest. So just a little tidbit on there, but again, waiting for some of these prices. I'm certainly not going to just jump in and buy thinking like, oh, it's going to have a higher low and this will be a trend line. I think we're coming back down to these March lows, if not lower, and that's for pretty much every stock. Every stock I took profit on in April or May, I'm trying to buy them again at good levels. Another one that made a pretty good pop here was First Horizon National. That is a bank stock. I bought that at $7, and that went up quite a bit. We were up to around $12. So I did cash in on that run. I just looked at, take a look at this Fibonacci swing. We have high to low. We pulled back to that 38%, 5.0. Those are perfect levels for a nice little retracement. Now, do I think we're going to come back down to those lows again? I hope so. I would buy it again at $7. So that structure is uniform on a lot of stocks. So if you're interested in levels of where to buy, that's where I'm looking to buy. Other stocks that I'm actually investing in right now are low volatility stocks with historical ranges that are very small, and also pay monthly dividends, quarterly dividends, annual dividends, and just have some money parked and stashed and know that it's going to be a 3 to 4 to 5% yield. And that's either monthly, quarterly, whatever. I'll take that. I'll take that now as a safe measure and some low volatility plays that I can reinvest. I'll also take the big gains I had back in April and May, and I will use that profit and apply it at better prices. So I'm ready to buy stocks again when the prices come back to me. I'm not going to chase them. And I think that's why we're talking about that game of cat and mouse between Robinhood investors. And again, they're being lumped together. It's not Robinhood, right? I mean, there's Robinhood, there's Webull, there's multiple apps out there that are allowing retail traders that know nothing about the stock market, know very little about investing other than sounds good, I'll buy it. Market buys. And Wall Street does not like that. So asset managers are probably going to get their revenge. And I think at the end, the retail trader will ultimately suffer fate. But we are not just your average retail trader. We know that this is a game that Wall Street plays. So I'm prepared for it, which is why I think that it's not just going to be easy to just buy and hold and think that everything's going to be fine. There's going to be some pain ahead. There's going to be some tough, troubled waters ahead. So we need to be prepared for that. Equity management at the end of the day is your only real way to salvage profits in the market. It has to be about timing and patience and discipline, but equity management by far with whatever strategy you trade and whatever, financial instruments you trade, that is the way that you get ahead. So anyway, that is it's just some stocks that I'm looking at. Timing, I'm it could take all year. If we come back to these levels, in the next month, awesome. If we come back to these levels in November, awesome. I don't care. These are levels that I'm setting chart alarms on. These are levels that I'm willing to wait for. When it comes to the currency market this week, I will talk about here. Actually, I'll show you one of my strategies here. So I have a couple of strategies. Here's one. So I have a strategy called the perfect storm. I'm going to go into some of these currency pairs here. I could just pick any currency pair with the perfect storm. And between the 4-hour chart and the 1-hour chart, I'll just show you what this system does. Essentially, we're using this channel to sell high and buy low. Now, we had these wild trends back in March. So this March trend, this April trend has then started to settle down. So what's nice about this is I'm looking at small trade sizes. I let this robot work itself through trades. This area, it is looking to sell. I'm trying to use a line here, but my tool seems to be a real turd right now. I'm looking for this area to sell. So it's selling all of these highs. And again, small doses, you can scale in, you can space them out. And then we're looking for a net position and profit. So you can close out here for profit. You can run into a certain profit target, and then it starts to accumulate buy positions and do the same thing again. So it will accumulate resistance levels to sell, take profit at a pip target, take profit at a dollar amount, and then once it's done, it's either going to hit the highs again, hit the lows again, start to buy or sell. So it started to hit the lows, it started to buy, takes profit at the high, starts to sell, takes profit at the low, starts to buy, takes profit at the high, and it continues to do this. So you and I might see this analysis and say, there's not a good trade. In this area, what are you supposed to do on this trade right here? Nothing, right? I mean, there's not a lot of trading unless you're going to get into the grind on a smaller time frame and buy low and sell high and have this little tiny scalping system, which I have that too. But it's a lot easier for me to have a robot that buys low, sells high on its own without requiring my constant deployment. So that's what it did. Now, right now, it's doing the same thing. It has some sell trades in. If this ends up coming back down and we have a range high here and a range low there, well, this is also going to work its way back into profit. So there's a lot of ways that this system does really well. Same thing can be seen on a 1-hour chart. I can go to another currency pair as well, but same thing here. We have highs, lows, highs, lows. It's more active, of course, on the smaller time frame. This whole anything about this course is called my perfect storm. I do have some very detailed videos on it for the reason of equity management. I need to make sure that traders are not just expecting this to constantly be profitable. There will be times, and it's happened for 2 months, or for the last 12 months I've traded this robot, I've had 2 months where I've had to jump in manually and work my way through some drawdowns. Now, it's not bad. All the drawdowns are pretty manageable. They kept, because of my trade size, I kept the drawdowns to within single digits. But I did have to jump in, intervene, look at better levels and highs and lows and add to my position and manually just kind of tag team with my robot to work myself into a profitable position. But for 10 months, this thing has been on pretty much full autopilot with just taking profit, and it's generated almost 50,000 pips in the last 12 months. That's ridiculous, and that's way better than I expected for anything. But it's amazing. So that system is doing amazing things. Another system here and again, this is all kind of catered around what I'm doing for the next couple of months. I have a system called the Equalizer, and it's doing something very similar. This is going to be using support and resistance levels to sell high. So this red area is where it is selling, and the blue area is where it is buying. Now, what I'm looking at is the historical significance of price doesn't like to go too high, and price doesn't like to go too low. And so in the event that it comes down into this blue area, I'm looking for buy trade. So if it comes down into the blue zone, it's looking to buy. And for every level that it takes, it has a specific, pip target or dollar target tied to it. So if you want to go after one position in 20 pips, two positions, you can bump that up and say go after 40 pips. Three positions, go after 60 pips. So whether you are buying the blue area or selling the red area, you have pip targets, you have dollar amounts, but it's a dynamic profit management system that allows this to do really well. And in the event that this stays sideways, if price stays relatively quiet, stays relatively sideways, this area is going to be a great spot to just buy blue, sell red, and take consistent profits. Now, I would probably look at this currency pair, for example, and say, there's nothing I want to do. But when I say that and I see that there's very little movement, it's a system like Perfect Storm, it's a system like the Equalizer that will buy low, sell high, take quick profits, and it will chunk together some nice wins for me. And that will help pay for my summer. And if that's what price does, that's going to be a great summer. It could be maybe 3 to 5,000 pips for the next couple of months by just letting this system take little wins, and it does a great job doing that. So I had some really detailed classes on that last week. If you're interested, again, send me a message, let me know. I'll happily share how you get involved. Equalizer, Perfect Storm, they're both great systems. They're both automated, and right now there's a specific window to deploy them. It's now. Now until probably that first week of August is when I'm going to really amp up how I trade them. And then as we go into that, mid-August, do we have a post-summer breakout? I will start switching into more trend-friendly. Now, I will say that the Equalizer also has some really good trend features. So, for example, and I'll show this really quickly and we'll get into other pairs. The trend feature would be this. If we have a breakout and we have a direction, take a look at this. When we had our risk on trading or risk off trading, so March was all about risk off, right? So pretty much every day since late February into March, it was risk off. The Aussie was getting crushed. The euro, the yen, the dollar, the Swiss were extremely strong. All this system was going to do with risk off was buy. And so if you put on the single direction of buy only, anytime that price touched the blue area. So we have touch the blue area there, touch the blue area there, and there. And you can continue to add more trades as this is just a cushion to buy low. And this movement ran up for almost 3,000 pips. And then we had our flash crash moves, our tops were formed, and then we had risk on coming back in with that bottom in March and running back into April and May recoveries and rebalancing the Forex market. So you can turn around and look at this as, hey, the Aussie's recovering. The Aussie's at these great technical levels. We saw risk appetite. And now you turn around and you just sell the red areas. So we had the direction. We had the direction on both our run in March. We scalped like crazy. We made a lot of profit in March. We scalped and made a lot of profit in April. So this was a system that was well equipped for that transition. All we had to do was make the adjustment. So rather than telling it to buy and sell, we said, look, here's a directional bias. We're going to buy only, and we cushion those support levels. Here's a risk on environment. We expect it to go down. We're going to sell. And so we have that cushioned red area to sell. So we will have some really solid, month and a half, 2 months of range trading. That's what I'm looking to use for systems. And then we will go into some trend breakouts if we see those post-summer moves in August. Otherwise, for the rest of this week, my week is probably going to be a lot like last week. Last week, like I said, was a fairly boring week. The robots did some work for me on Perfect Storm and Equalizer. Directionally, what I'm expecting this week, I still think the Aussie is going to drop. I still think the New Zealand is going to drop. A pair that I'm watching very closely, the Aussie CAD. I'll just kind of revisit this one here. So the Aussie Canadian dollar, this should be wanting to fall a bit lower. Again, there is a ton of disagreement between the higher time frame. We have highs up here. Momentum is not agreeing. We did hit overbought conditions, and we're showing a lot of indecision. I think that this is a spot to look for equal highs to sell high and expect this to drop back down into these lows. All right, my tool is being a real punk today for some reason, so I'll try to keep the drawing to a minimum, I suppose, today. But looking for this area to hold, be resistant, and start to drop. We could also have a little trend line break. If it does make a higher high, I would just draw an aggressive trend line, wait for it to break, and I'm still going to short and hold short the Aussie CAD. The New Zealand CAD is another one. I do expect this one to drop as well. So you can see a very similar setup. We're seeing some disagreement. Prices coming back to retest the high. We're showing disagreement. We're not quite at overbought conditions yet, but we're getting there. If we go a little bit higher, we can creep up into 8,900 or 9,000. But to me, this is a channel. We have really good structure on this higher time frame, from highs to lows, really good technical structure to sell high, which is going to be right around 8,900 to 9,000. I'm looking to sell and stay short on the New Zealand CAD. We've had some really good profits on dollar CAD recently. We're looking at some volatility out of the pound crosses, possibly for some scalping this week. But, if we're going to see a decent move in the Forex market, it's going to have to be with the yen. It's going to have to be something with risk on versus risk off. That tends to be where the baskets start to move. So if we have risk off, the Aussie gets weak, the New Zealand gets weak, the CAD gets weak, the pound gets weak. That's a lot of movement in the currency world. When we have risk on, those get stronger. When we have risk off, the yen gets strong, the Swiss gets strong, the dollar gets strong, and the euro shows some strength as well. But your big catalysts are going to be the Aussie, New Zealand. If it's risk on, they're stronger. If it's risk off, they're weaker. And then the Japanese yen and probably the dollar and Swiss. So that's what we're looking for. But if everything just kind of stays the same, if everything inside that currency strength chart remains between 30, 40, and 50, if there's just not really a significant breakout, you have to find a way to either have the patience and discipline to stay out of the market. If you don't like what you're trading right now, then stay out of the market, or have a system and strategy to adapt to. And that's what I'm doing. I'm adapting to the range conditions. I'm adapting to the lower volatility right now. And, my finger is on the trigger to say, right now it's fine. I'm watching the robot. I'm managing the robots. But I will be really quick to also turn them off if they get into any trouble. If we start to see some big breakouts happening, or some, heavier news that actually starts to create a lot more volatility this summer. But there's something about summer trading that historically seems to be quieter, lower volume, less kind of abrupt movements. August is one of those months where we start to see some transitions. August is a month where volatility increases. August is a month where also volume starts to come back in. So I think we're going to be kind of on autopilot here for the next probably 2 to 4 weeks. It doesn't mean it's going to be boring. It just means that I might not take a lot of trades manually. It might mean there's a lot of watching, a lot of alerts going off, but that's okay. We'll be prepared for that. So, we can sit here and go through all these other currency pairs, but the story is going to be the same. If it's consolidation, then you're going to trade consolidation. If we have major levels of support resistance, go to a higher time frame. Look at the higher time frames. Look at the daily, the weekly charts. Find these big levels, right? For example, dollar yen. We had the system. We had my right trader max system looking for breakouts last week on a 4-hour chart. They never confirmed. Okay, so we're trying to tell this robot, if you get above 107.60 to buy, if you get below 106.60 to sell, and neither of them happened. So last week there was such little movement that we didn't have a trade below or above. So we're still waiting. If we get above, we're going up to this yellow box. If we get below, we're looking left on our chart. We're hopefully heading back down at least to this level around 106. We know that also there's a major support level around 105. So I would like to think that this area here is a spot that we can buy, and this area here is a spot that we can sell. But we have to get a breakout. So I'm going to let this dollar yen close above or below, and then aggressively jump into a trend system and go after a few hundred pips. So that trade is set up and ready. The robot just needs to see some confirmation above or below, and that'll be the next trade on dollar yen. Let's take a look at gold, silver, and oil. Okay, here's oil. Oil just hanging out around those $40 highs. People are driving again. People are going back to work. The economies are reopening. Oil, from a technical standpoint, $40 major resistance. Is there a reason for oil to drop? Well, if airlines are canceling flights, or we have another big wave of coronavirus and people are all of a sudden going into potentially stay-at-home mandates once again, or lockdowns or quarantines once again, then yes, oil will technically drop because of a lack of demand. But again, from a technical standpoint, $40 to $42 major resistance, and I do expect oil to fall from there. Gold can't break above 1750. I say that, and it's at 1756. I'm not convinced. I would have to see, not just today, I'd probably have to see gold for the week close above. No, daily. So this is the daily candle. We're sitting here right above 1750. Now, if the candle closes here, okay, that's a convincing daily candle. Now we can take that breakout with a stop area nice and tight within this range and see if it continues higher. If we have a rejection by end of the day, then look for this to be a wick to the north and it stays within this range between 1750 and 1700. Gold is a pretty good way to look long if we get a breakout. Now, if I am long on gold, okay, I also want to be really aggressive on trapping profit. Really aggressive. As in, if we can get to break even on this, let it run, move it to break even, and let your profits go. But I think we could have, a decent breakout. We have a ton of disagreement. It might stretch gold into overbought conditions. So something you can look for on the daily chart. This is a relative strength index with a 21 period. You can look at gold touching the overbought condition here on the RSI. And if it does that, I would look to protect profit, but again, eliminate risk if you can. So get this thing up maybe, 50 pips to 100 pips, move it to break even, and try to get this RSI into overbought conditions and start moving that stop loss tighter and trap those profits. Because again, with disagreement with overbought conditions, we're probably setting up for a fall on gold. Silver, so XAG if I can type it in, there we go. We're creeping back up towards these previous highs. I'm looking to cash in on silver around $18.75. Chart alarms are set all over the place. I am watching this one carefully. I don't want to forfeit profits like I did earlier last year. I was in this around $14, took it all the way up towards 19 and change, did not take profit. I thought it was going to hit 20 bucks. So pulled back, bought it again. I thought it was going to hit 20 bucks. It didn't. Pulled back again. I didn't buy. I didn't actually buy in March. I was just holding positions. But now that we're back up and running, if we get back into 18 and change, $19, since I do have more at stake in a bigger position, I'll probably take some decent profit off the table on silver. Right? Cryptocurrency wise, Bitcoin was back down to around 9,300. Not a ton of volatility on it. Again, lots of sideways movement. If we see some support on Bitcoin and other cryptos, look at the yearly pivots. So right now, Bitcoin has a yearly pivot at 81.50. As long as price stays above that, even if it's choppy and sideways, that's fine. As long as we see some supportive structure in here, this is a good spot to be looking to hold and maintain. And again, look at this horizontal line. This could be a really nice neckline for a bullish head and shoulders. Okay, so I have here, inverse head and shoulders. If this is the neckline and we hold this support at 81.50, once we break above this level, which is around $10,300, we get above that level, we should be off to the races to the upside. So fingers crossed that Bitcoin and other cryptos can run, but I think leading the way and setting a good example for that path would be Bitcoin crossing above, $10,300 and closing, and off we go. And Ethereum goes with it, Litecoin goes with it, hopefully Ripple goes with it, and other, maybe other cryptos that you're watching as well, but they should all be hopefully led by Bitcoin. So, any questions for me? Anything you want to know? Anything as far as my trading room? Any systems, robots that I'm trading? Let me know. Send me a message on my YouTube channel. Like the video. Send me a comment. Send me a direct message on Instagram. Again, to take a look at those, they are right here. Here are the handles that I have on social media. Instagram is at pulver.chris. My YouTube channel, just type in my name. It'll be me in a suit. Facebook, you can see me as well. I will be building out a new Facebook page, so just give me a little time on that. I'll be building out a new Facebook page to, post videos like this and others, and have a lot more correspondence, because right now Facebook is kind of something I don't use a lot of. And I should, but again, it's easier for me to just use YouTube and Instagram right now. But I'll be able to build out a Facebook page as things develop here further. But that's it. If you have any questions, let me know. Send me a message. Like the video. I appreciate it. But make sure you subscribe. Get the notifications for when videos like this come out. And there will be more videos coming. Like I said, choosing a broker, sponsored by my friends at Forest Park FX. Trend versus range. Well-rounded traders. Scalping, day trading, using robots, all sorts of great topics that traders have asked me to do videos on. So they are in the works. So that's it, traders. Have a good rest of the day, great week, and happy trading. Lots of profits, everybody. Talk to you soon. Bye.